Good day, everyone. Today is September the 4th, 2024. It is 11:48 a.m. I want to get through an entry, hopefully very quickly here, where we can talk about the intraday day trading principles that we've been talking about for members as of late. Right here on my screen at the moment, you see SOFR futures. I think SOFR futures may have made their moves for the day. I'm looking at the last white in the white pack, and it's moved 10.5 ticks. We have the first red that's moved 9 ticks. Sort of a, not massive day, but it's a bit of a larger day. That's sort of what you can expect in a move out of 90-day interest rate futures as of late. As you know, I was watching that like 96.90 structure in the December 2025 SOFR futures. We've moved a little bit higher to higher yields through that structure, but I really think I wouldn't be surprised to see us sort of hang out here. And we've got ISM services tomorrow, and then we have NFP Friday, which I think is going to be the biggie. So we shall see what we shall see. We're definitely within that range that we've been in for the last month as far as yields are concerned. Now, let's talk about intraday trading. Okay, let's talk about intraday trading. We've been talking about that for a while. I want to try to describe what I've been thinking, and it's hard. It's hard. Well, why is it difficult to me explain what I'm thinking? Because intraday trading or day trading requires discretion. And discretion is more than a feeling. Let me pop over to the E-mini here. I'm going to show you the E-mini. Okay, so here we have the E-mini, right? Now, there at the end of August, we had just been popping around that 5,700 region, sort of developed a big structure there. And what did I say yesterday in the daily trade log? I said, I think I'm just going to watch how the beginning of the month unfolds. Well, why would I say that? There's some discretion. See, discretion isn't just a feeling. Discretion is, it is and it isn't. It's that move that you do make. It's that move that you don't make sometimes. It's, I'm going to take that trade, or I'm just going to wait just for another few more points and get I'm not just going to fudge it and go in at this price. And other times you're like, no, I've got to get in, and I've got to get in now. There's no rule set that's going to help you there. The discretion, you make these variable decisions that can have a massive, and I mean massive impact on your trading. Is, a friend of mine calls it discretionary kung fu, right? You wouldn't believe the impact it can have on your trading. As a matter of fact, I was working on a very simple program. This goes back about 6-7 years ago. And you may have heard me tell this story before, but I'm going to tell it again real briefly because it has an import to what I'm trying to explain here. The partner that I was working with said, you're allowing your discretion to skew the results when you scratch this out by hand before we would ever go to code it or anything. And that's affecting the results. And I said, no, it's not. So I came up with a blind method of getting the results, right, of just a scratch out process. We're not talking about like coding something up. We're talking about before you code something up, just scratching stuff out, right, of a rule set. And I said, to prove it, I've got a blind method for obtaining those results of whether it's a win or a loss. And one way I'm going to do it just as I have been doing it, just to show you that I am being disciplined and I am not allowing my discretionary skills that I've built up, at that point it was like 25 years as a trader. Now I've been almost trading for 30 years, but it's like, no, just to prove to you that I'm not allowing my discretionary skills to influence the results. I'm going to do it just as I have been doing it because I'm disciplined. I'm not letting my discretion in. And then I've got a blind method for getting, reward and risk and what these trades would look like on a scratched out process before you take it to code. And I'm going to run both of them, right? And it'll come out exactly the same. I'm telling you, the rule set's the rule set. And so that's what I did. The results were staggering. And I basically took a walk from the project for 3 days and just would walk around the neighborhood. Because where I used my discretionary, I was using my discretionary skills. He was right. He could see through it. That's why we were working together sort of as a team. He could see what I was doing. And I couldn't. The one where I just did it as I had been doing. Impressive results. That's not half bad. The one where I had a blind method for getting, even just scratching it out, getting the risk and reward and trade events and occurrences and all of that in a mechanical method was a disaster. It was just an absolute trading ecological disaster zone of a program. Didn't even look remotely similar. The results didn't look anything like one another. So I tell you that story to say, you build up discretion over experience. And it's a skill you got to build, and especially is that true in intraday trading. Now, you can have more rules-based stuff. The longer the periodicity, it becomes very simple, right? And I've even shown some of that stuff on like 30-day periodicities, right? But on intraday, no. Markets are far too adaptive. And you can day trade and swing trade effectively. It requires some discretion, though. And those minute decisions that you make that you don't even realize you're making, built up of experience. It's like, I'm just going to take this one for a scalp. Nope, I'm holding on to this sucker, and we're going for a ride, right? Those tiny little decisions you make that are just based on not just feeling, but feeling born out of experience of staring at these charts for so many hours your eyes bleed, right? It builds a discretionary skill. Discretionary Jiu-Jitsu, discretionary Kung Fu, whatever you want to call it. So I'm going to try to describe some of what I've been thinking the last few days. Okay? And some of my thought processes and decisions, just as a look over my shoulder to what I was thinking. So we were in that 5700 structure on the E-mini. And we'd been bouncing around there after volatility sort of just calmed down, We had, printed 40s in the VIX, and then we rallied as volatility cooled down. But then we hung out at that 57 structure, and we hit it again and again and again and again. And this is something I was just talking about with a business partner of mine. Once something's been just touched so many times, I don't want near it. I would like more of a, he uses the term virgin area to sort of make decisions based off of, right? Well, why? Experience based off of doing this for a long time. So when I came into September, I'm like, listen, September is usually not a good month for stocks. And I'm seeing we're bouncing around this 5,700 region. It's the first trading day of the month. Let me just see if volatility expands a little bit, because we just can't stay in this 5,700 range forever. Lo and behold, we got what we got, right? On the first trading day of the month, volatility expanded dramatically. Zoom in there a little bit. And we sank and we sank and we sank. Now, what have I talked about before in these entries? Rotations, right? What's your typical rotation? You see that rotation?